What's going on, young money hackers? We're back at it again with HD and Charlie. Today, we're doing what we've been doing every week, which is talking about properties, how we can use properties to get rich, to generate a portfolio, to make a growing portfolio so that we can actually have a lifestyle. We can generate wealth using properties. Today, I'm plugging in from China. I've been traveling around the world a little bit, which is quite crazy. I sound a little bit sick, so do excuse me if I'm a little bit, off my game today. But when I talk about real estate, it's like, I'm sick. What? Like, no, I'm back to my usual self. So really happy to be here. We want to talk about the latest updates in the market. Talking about interest rates. We're going to talk about, where the opportunities are. What we can do right now as young people to start investing in property, as Aussies, young Aussies with income. That we just have no idea how to actually invest and how to actually convert that into cash generating assets through the method of property investing. We've had some pretty good engagement recently with a lot of people showing a lot of interest in what we do, and a lot of followers came into our system recently as well. So really appreciate all the viewership and the engagement, guys. Please continue to engage. We are not silent, so please reach out to us. Any questions you guys might have, do not be shy. We are literally a single DM away. And while we're on the topic of DMs, if you haven't done so, make sure you click follow on the potty as well, but also follow us on our social pipes so that you can stay updated with some of the quirky videos that mostly Charlie makes, because Charlie's the better looking version of this podcast.
I don't know about that, mate. Don't be so hard on yourself.
Come on. But anyway, look, really glad that we can connect with you guys in this way. But let's kickstart the things off today with some of the market at the moment. Yeah, interest rates. I mean, it doesn't really look like it's really going to come down. It's sort of slowed down a little bit, staying where it stays right now. But the fact is, at 6 to 7% interest rates, not an easy game to play. This property thing. What do you think, Charlie?
Well, yeah, I mean, the inflation figures have just come out for the recent quarter and have been far more than was the RBA projected. So the response to that naturally is that means that there is a high chance of another interest rate increase, because that's obviously how inflation is controlled, right? But it's interesting, traditionally in the past with property, there's always been that inverse relationship between interest rates and property prices. When interest rates go down, property prices go up, and vice versa. But in the last 12 months or so, we've seen pretty much the exact opposite, especially in some of the capital cities and suburbs, which we're going to get into here. But some of the growth we have seen, despite the interest rates just keeping on climbing, has been absolutely unbelievable. So we're just going to do a little bit of a market update, tell you guys what we've seen, and also a bit about what we would do in this current market, like how we're helping our current students and clients get results, but also, like what we see, so we can give you guys a better understanding of this whole thing.
Exactly right. I mean, interest rate is interest rates, but I feel like there's the cash rate and there's the interest rates. What it is that cash rate is what the banks borrow the money from the mint, the reserve bank. And then what they lend the money out is where they make the gap, So home loans are sitting quite high. I'm not going to lie, and, with a yield where it sits on an average basis, like real estate game, for you to actually do it right, you really need to have the right tricks up your sleeves. Otherwise, you're going to be shortchanged. Now that doesn't mean to say that there's no more opportunities in property. There's actually more opportunities in property than ever before. Like the gaps in this market is absolutely astounding. And
that does sound like it sounds like a very bold claim you're making, but to be honest, like it is a bit of a unique situation in the market.
It is.
But yeah, sorry to interrupt. Yeah.
No, that's okay. But like a lot of people sort of look at the current market and go, "Oh, property's dead. Like you can't do anything. It doesn't work. This and But the thing is, as much as there are naysayers, there's always an opportunity. But you will find that in your life, whatever you do, no matter which vertical that you belong to, you will always find naysayers. And you know what? It's always doom and gloom. Never has there been a time in history when everyone said, hey, you will do property and you will always be really, there's always been a complainer in the marketplace. And that's called the media. And that's called the law of averages. Average people out there will yield average results, and those average results will lead average lives. And we're here to try and lead an extraordinary life, an above average life. We are, when do you retire? You retire when you're old. Well, we're challenging that notion. We want to retire when we're young. The FIRE movement is here and here to stay. FIRE stands for financially independent, retire early, right? Like that thing, that's why we're doing this. If, you know, we're not here to just buy one property and just be like, oh yeah, now I can have a dog, right? Live with my missus and go to a winery every weekend. That should be all good. Maybe go check it to Bali, you know, once every couple of years. You know what I mean? Or do a Europe trip just so that I can post some nice pictures. And then in 5 years later, you haven't gone anywhere because you spent all your money. Like, that's not what we're going for. You know what I mean? We're going for the lifestyle that is substantiated by growth in wealth, and to be able to do it when you are young, because you have energy and time when you're young, and freedom. So going back to
said, man, I think that is so well said, the HD. I think that, like, again, for the people that, you know, that is their average lifestyle, they just want to do their thing, whatever, like, that's fine. But we are, again, talking to people who, you know, they want the best results out of the property portfolio so they can get those epic results at a younger age. So that's what we're all about. So HD, tell me a little bit about what you have seen in terms of the media recently, and what like a bit of an overview of the capital cities, just to give people context on the property market.
Well, on our Instagram feed, if I jump straight into it, and on our Instagram post, we've posted the latest October results. Right, we're in, like, 3rd of November is the date of this recording right now, and October 2023 results have shown that, you know, there's various growth all across Australia. Now, here's the thing. Property prices are not slowing down. Interest rates are going up, but also inflation is not slowing down. I mean, you'd be crazy to spend 6 figures on a property to buy something and invest in it, right? That's what naturally where people's heads go to, but it's not true. It's not true. These figures are, like, I've stressed in the post that these figures are merely averages. Now, let me like, let's do a bit of a math lesson. You know, we learn how averages work in school, right? So let's say there are 3 scores. If all 3 scores are 7s, then the average of those 3 scores is a 7. But if one of the 3 scores was a 6, and the second one was a 7, and the third one was an 8, then the average of those 3 scores is still 7. Meaning, when you grab an average, there will be those data sets that will outperform that, and there will be data sets that will underperform that. Which means, according to the data, right, let's say have a look at annual growth in Australian Capital Territory, ACT. They have an annual growth of 0.18% negative. They've lost 0.18% negative. So they've broken even. There's 0% growth in a year, which is pretty crappy. But that means 50% of houses have gained positive growth, and 50% of houses gained negative growth. That's basically what that would mean. That could have been a big chunk of it that set right on that median, that right on that little bit, but that right in the average zone. But there's a good chunk of it that will sit above that and below that. And what really scares me is markets like Perth and markets like Adelaide, where the annual growth sits almost around that double-digit returns. Perth definitely has cracked that double-digit returns. That means there are properties that has gained more than 10% per annum. And that's amazing. And how do you go after these high-yielding properties, the ones that have growth in it? Or that's the art of property investing, isn't it?
Yeah, so like, no, I think it's really well said, man. It's like, there's always going to be averages. I think it's important to understand that like looking at a capital city and saying, well, you know, Perth has gone up, 10% in the last 12 months. That's fantastic. Yeah. That doesn't mean that your property has gone up 10% in the last 12 months if it's in Perth. So there's always going to be pockets and data points to individual suburbs that perform better than others. And that goes for every city. So like, if I go around, let's just go around the map real quick. Perth has gone up 10.9% in the last 12 months, median value $604,000. Darwin down 1.35%, median value $493,000. Brisbane up 7.36%, median value $770,000. Yeah. Sydney up 0%, median value $1 million. ACT, as you just mentioned, nothing, median value $850,000.
But here's the thing though, like with things like Brisbane, right? Like not Brisbane, sorry, places like Darwin, we've been able to find markets where they are, they're like 10% growth in the last year as well. So you're absolutely right. It's not just about the state, but it's about the markets and the actual property that you go for. At the end of the day, it doesn't matter how much your neighbor makes. It only matters how much money you make.
Whoa, hold up, young money hackers.
Are you sick and tired of the rat race and want to start building wealth with property and generate passive income?
Then come drop us a follow on Instagram and DM the word hackers.
The word what, Charlie?
The word hackers, like young money hackers.
Okay, wait, Charles, what was our handle again?
At young money hackers.
You heard him, everyone. DM us the word hackers to learn more about property investing. Now back to the podcast.
Right? And the decision that goes around making sure you make that return is the most important part at the end of the day, right? People shouldn't be investing based on one number alone. And this is just one number. That's the thing. So it's not about, oh, people will look at this and most likely they go, oh, look, Adelaide's doing it, so I'll just go invest in Adelaide. That's dumb. Go and find the deals. Go and cut the deals, guys. That's where the skill is. That's how you then yield results. That's how you then grow your portfolio. I cannot stress how important that is. So that's the thing, man. Like, you know, all these, even in the bad market, even in the good markets, I could find heaps of properties that has heaps of properties and pockets of that city that has done very poorly. There are suburbs in Adelaide that's gone negative. So at the end of the day, it's not just about, oh, hey, I saw this data or this article on the internet, and so this is going to work or that's not going to work. But you got to be able to then keep going with, the research, the actual know-how to then find the right property to invest in so that your portfolio, not just that property, but your portfolio is positioned for growth.
Yeah, so I basically boiled it out to like three major components: searching for a property, being able to buy the right property, and scaling it, which is the strategy that you can use to repeat this whole process, right?
Exactly.
That will work in any market, depending on obviously your expertise and how you implement your strategy.
And that's exactly right, bro. And to have the ability to search for a property with scaling in mind, I think is the most important thing here. Yeah, it's great that one property has set you up, it's gone up 10% and all the rest of it, but you'd rather have three properties that go up 10% rather than just have the one property go up in 10%, right? But here's the thing, let's circle it back to all the talk about the interest rates and stuff. Interest rates sitting at 6 or 7%. Yeah, okay. But what if you could buy a property paying those interest rates, but service them with rent, but then also the capital value of that property go up 20% a year? I mean, I'm looking at suburbs now that it's in the past, right? Like, for example, I can just pick any old, like in Northern Territory, some of the top performing suburbs have performed anywhere between 10% to 28%. It's crazy, some of the returns there. So you're going to tell me that you're going to miss out on 10 to 20% gain in property capital growth because you don't want to pay 6%. So if you were more sure about the fact that the property that you're buying was going to give you that return, if the investment that you're making has a potential return that is greater than that of the investment that you're making, wouldn't you be the craziest, the most irrational person not to make that investment? At the end of the day, that's what investment really is to have more come out than what you put in. That's it. And I really want to ask, does more come out than what you put in out of your job? By trading time off, an invaluable asset like time, you trade that off and you get an infinitely valuable resource gets traded for a finitely valued resource, which is money, right? A limited value comes back for an unlimited value. Like, that to me is not really a good investment. So the sooner the young people of Australia get around to the knowledge and the know-how of finding the right deals and the properties, the more ahead that they're going to be. That's it. And the research that goes around it is more than just one infographic of like all the states and how well they did it, but it's about identifying strategy and identifying marketplace, and they go, okay, here's a spot here. I can identify the gentrification, the growth, the infrastructure, the population. Right, I can see the demand, the rental demand, the shift in age groups, and also the the involvement of infrastructure and industries, and that's basically what we can utilize and identify to be able to then pre-calculate those growth into the future. And there is an art to this, and it's scientific, it's statistical, it's mathematical, and the sooner you realize this, the better your life will be, effectively.
Okay, I like how that's valuable. So, like, you're looking for areas that have gentrification, that have that development in place, that are prone to go up in value. So that way, these young people listening, they can take a educated decision that's going to benefit themselves, rather than feeling like it's this big daunting risk that they have to take. It's like, well, if it works, then great, but if it doesn't work, then I'm not in a good position. Well, data and expertise will take care of a lot of that. So like
exactly
what you've just said, so that's a good way to look for properties in certain areas in a certain state or city that are going to have your back. So you can comfortably do the numbers and say, well, yes, I'm going to be paying 6.5%, but if this property is going to service me, and maybe even if it's just breaking even, right? So it doesn't necessarily have to be positively cash flowing, even though that can happen as well. But if it's covering itself to the point where you're comfortable holding this property over a 24-month period, in which case it's prone to, growth, let's say if it goes up by 10%. Well, that's enough equity there usually, depending on how you financed it, to make another decision, to make another step in the right direction with your portfolio.
Exactly.
So that's the exciting part with all this. We're in a unique situation at the moment with interest rates. At the end of the day, there's still a lack of supply, and that will only mean that right now I feel is a good opportunity for people who are interested in property to take, to make a decision.
Take action. Exactly right. And
take action.
And that's probably the worst thing about our generation, is that we just suck at taking action. Like, we wait for the very last confirmation to jump into doing something. That's our biggest problem. Like, I also blame myself for that as well. But every day, every year, these returns are passing you by. And if you complained this much that you cannot buy property this year, you'll complain even more next year that you can't buy properties because it's too expensive. And the year after that, you'll complain even more. It's not going to get any easier. The sooner you find entry into the market, into the right property, into the right assets, the better off you will be in the long run. And that's where you're going to profit the most. And it is so recommended that, look, I'm sure most of you listening to this have a job. How much time and energy have you invested into having that job and to earn yourself that cash flow? Well, there is that. I can tell you from experience right now, and so can you, Charlie, is that what we know isn't particularly complex either. It really isn't. Compared to being a surgeon or an accountant or an engineer, it's nothing. It's really nothing. It's just identifying key data. Being an engineer, being a doctor, being all these things, it just proves that you have plenty of intelligence. More than enough intelligence to be able to handle something as easy and simple as property investing that is generative. So since you've proven yourself to that already, why wouldn't you then invest the time and the energy and the know-how into growing your portfolio? Because at the end of the day, that's going to give you the lifestyle that you want, not your job.
I agree. I agree with that a lot. Having a job is obviously one of the best things for your cash flow and your serviceability. So don't get us wrong there. We're not saying quit your job at all, but we're saying, but what we're saying is, like, a lot of people, from my experience anyway, a lot of Australians especially, are already obsessed with property, and they already have this conditioned, mindset of like, buy the house, and that's great. But I say, let's plug in some property investing. Let's plug in some financial literacy to that belief that you guys already have, if you do, to literally change the trajectory of where you're going to be in 10 years' time. And that's the exciting thing about property. I feel like it's one of the highest success rate, endeavors that people can get started with. And also on this whole topic as well, buying your first property doesn't necessarily have to be, and I've said this a lot, but it does not have to be the property that you end up living in. If it's I hear a lot of people DM me saying, I can't afford to get into the market. I'm like, can you not afford to get into the market, or can you not afford to get into the market where you want to live? Because where you live and where you invest are two completely different strategies. Absolutely. Which one are you? Are you being emotional? Are you being analytical and taking action, like data-based action based on where you want to be, rather than emotional action based on what you are conditioned to believe? So that's a really strong belief that I have, and people challenge me on it all the time, and I'll fucking take it home. I'll die on that hill. So, I love that conversation. Yeah.
That's right. So yeah, and I already love seeing all the results that's generated through all of the people that we are connecting with as well, the Precious Group and Young Money Academy. Yeah, it's amazing how simple decisions that you make now can change your life, as quickly as a few months down the line. And it's just amazing to see those results. Our lives certainly have been changed because of that, but to be able to fast track somebody else's life to get there, I mean, that's why we do this, guys. So really appreciate all your support, guys. Make sure you go like, share, subscribe. Come check us out on our Instagram. Follow us on TikTok, YouTube. You're listening to us on Spotify, so might as well just click on that follow button anyway. But yeah, we would love to see you guys in the next episode where we talk more about the Australian property, cater towards the young people, the young money hackers. We're here. Let's unite. We'll see you in the next episode. Peace out.
Cheers, guys. See you later.